Our next guest says a U.S.-China trade war could come as soon as 2025. Let's bring in Leland Miller. He's the CEO of China Beige Book. Leland, great to have you with us. As we were discussing here on set, the potential tariff increase on EVs really is quite meaningless because Chinese EV makers don't really make any sort of a market here in the United States. But in terms of solar panels, you know, the issue here is China exporting through another country. Do you think that these increased tariffs would go as far as to actually stop that trade from happening?
Well, that's going to be the big tell on whether any of this is serious. And it's not just solar. It's also EVs, because if you look at what the potential issue is with Chinese EVs coming to the United States, it's not likely they are going to be exported directly here. The issue is whether they're going to be produced in Mexico, produced in Vietnam, produced in a third country, and then they're going to avoid regular tariffs by coming in, you know, through the back door. So the way to gauge how serious these are, beyond the obvious political overlay that this action has, is to see whether there's provisions on transshipment and whether they're doing things in order to set up a multi-year wall, or whether this is an announcement that just sort of, it's announced today and it doesn't have much economic effects into the future.
Walk us through what you think will be the retaliatory, impacts here. You know, if it's the least, if it's the most benign, as you said, it's unveiled, nothing as much is done to actually enforce. What will China do versus setting up those walls that you're talking about, making sure that China is not getting into the United States market through third parties?
Yeah, obviously the benign response from China would be to do nothing or virtually nothing on this. They'll say they don't like it, but if you're looking at something which puts 100% tariffs on something that basically doesn't exist yet, you're not going to be hit with economic effects. The question is whether you want to send a political signal that we don't like this. So if there is not significant provisions around transshipment and other things, that I wouldn't expect the Chinese response to be too much. They want to save their bullets down the line. They understand it's a presidential election year. If there's something more meaningful, then it's possible that a U.S. company could get hit in China. It's possible that they could send signals through rare earth supply chains and other things like that. But look, China has fewer bullets than the U.S. does. They know it's a campaign season, so they're going to have to really look at this and see, is this something we want to try to respond to tit for tat?
Leland, one of the bullets might be, and it happened in August of 2015, the devaluation of their currency. I don't think anybody's talking about it. I don't think it's imminent. But what are the chances of that happening in the foreseeable future?
Well, we think it's pretty low. But look, you say that no one's talking about it now. 3-4 weeks ago, that's all anybody was talking about in my world. And so we were constantly having to talk about how it's not what Beijing's looking for to do a yuan devaluation. We understand the yuan is weak and pressy. It is a spot fixed divergence. Understand that this rising dollar has caused havoc, to the yuan as well as the yen and a lot of other currencies. So there is pressure there. But it's very much not in China's interest to do a yuan devaluation. They've been worried about capital outflows. They're in better shape than they were back in 2015, 2016. But look, it's not going to help anything to devalue, especially in an election year. It'll cause more problems than it solves. So we don't expect that to happen anytime in the near term.
Hey, Leland, Tim, yeah, capital flight, I think, for China, especially during periods where we've questioned the economy, has been a big deal. But what are the rumblings? What are you hearing behind the scenes in terms of the Apples of the world? What are U.S. companies really fearful of? And are they, because we can talk about this all we want, and we talk about it in a market context. But what are you hearing about some of the most important companies in our space that do a lot of business there?
Well, a lot of them, like Apple, are stuck between a rock and a hard place because they went all in on the China story years and years ago. And you couldn't tell them that they were putting all their eggs in a basket. They didn't want to hear it. They thought, we have very high-level Chinese contacts. Our economic model works. We will not be dissuaded. And now what they're seeing is there's problems on the Chinese side. The Beijing doesn't want to use foreign tech, at least in the government world. There's problems on the U.S. side. There's worries over supply chains and obviously geopolitics. But these companies can't simply snap their fingers and just create a factory in India or Vietnam or somewhere else in Southeast Asia or Mexico that does what the Chinese factories do. This is a very long-term transition. So they're very vulnerable in the medium term. There could be some cyclical good stories, but the structural story is pretty scary.
So you were talking before about how few bullets China actually has. Isn't that one of the major bullets, the fact that Apple cannot snap its fingers and just create a factory elsewhere, that it's still dependent on China? And so is the case for a lot of other American companies depending on China for growth, that is sort of the bullet that may not exist in the form of a tariff, but can exist in the form of just making business very difficult to do there.
That is exactly right. And about a decade ago, we made this we pushed very hard for companies, for certain companies in particular, to understand that just because they're very friendly with Beijing right now doesn't mean that geopolitical tensions were going to get worse. Trade tensions were going to get worse. And even though Beijing may not want to punish some of these companies, which are as close to a friend in Washington, D.C. as they have, at the end of the day, they're going to have limited amount of bullets. So if tensions rise past a certain level, they will have no choice but to act against these foreign firms in China, even if they've been traditionally friendly with these firms, because they have to cause some sort of policy chaos in order to push back against whatever the U.S. is doing at the time.